The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Excuse me, I'm Tommy O'Brien coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time, and we got quite the negative roll going on in the market. You buying that dip this morning? We got a little dip buyers in the den. Can't fault you, man. I've been talking about many times, right? That August 5th, quite the acceleration. You bought that dip? You're up, what, 600-700 points in the S&Ps. We got a little acceleration this morning on negative prices. We're trading right now only about 0.5% in the red, and the S&P's down 31 points at 58.65. NASDAQ 100, you're down 0.7%, 142 points in the red in the futures, 20,376. The Dow right now, right at about 43,000. We're trading off 171 points. That's about 0.4% in the red at 43,000, and you got the Russell negative by 12 this morning. Crude back above $70. We catch a little bit of a bid this morning. We were at $68 on Friday. We were in the $69 range yesterday, and we're at $70.74 in the price of light sweet crude. And we got another bid in gold. You pull back yesterday afternoon, and we've gotten it all back already this morning. We're up $14 on the session, $27.52 in the price of the yellow precious metal. Quite the acceleration, man. We're going to talk about gold coming up later this program. How about silver? Yeah, silver's got some real strength, man. Check out this move in silver, right? And what's cool here is, if you're checking out this one, you got a nice one-to-one move going on silver. That's going to bring you up to about 36.70. In terms of the acceleration that began in February, you trade up to 32, you pull back to 26. A one-to-one move brings you to about 36.70. You got silver this morning up 66 pennies at 34.74, and we jump to notes and bonds. It's been quite a pullback. 111.09 was the pullback last night, and how about it? You know where we are right now? This is remarkable. We are talking about a 10-year yield approaching 4.2. I think we hit 4.2 last night. 4.2. You look at this move that we've had since the Fed began. We're now at a 50% retracement on the 10-year. All right, we're chopping around. This is kind of the area you chopped around all the way back to July, and you back it up even further than that, right? Pretty remarkable when you talk about where we are in this 10-year. Just been chopping around. Are we going to see higher price, lower yield? Not just yet. The market is not just comfortable just yet, regardless of where the Fed may be, of talking about higher price and lower yield, as the 10-year has now reverberated back to 4.2%, back to a daily. Quite the slide yesterday, and we're just chopping around basically flat right now on the 10-year. You get the 30-year positive by 3 ticks. The 30-year is all the way back to the 618, right? You talk about lower price, higher yield. The 30-year is the longest basis, of course, and maybe the market's saying higher for longer. When you talk about the pullback, man, so much for that acceleration to lower rates on the Fed's cut. We jump over to the dollar this morning, DXY. It's not stopping on this one, man. The dollar pushing through the 618. We got a 104 handle. You talk about dollar strength. Now, I keep talking about it. You can't help talking about it. How is gold just continuing? The strength in gold right now in the face of a remarkably strong dollar. You price gold, our man Steve Rhodes, you price gold in any other currency, man. It's gangbusters, because you just had the dollar go from 100 to 104 in less than a month, and over that same period of time, you continue to have the gold contract setting highs, folks. Look at, there is no pullback on this gold contract chart. Meanwhile, we have a bounce going on of pretty epic proportions right now in that dollar, and gold just ain't stopping. So pay attention to that one, right? We jump over to the VIX this morning. A little bit of negative action in the market. Yeah, get those spikes up on your back, folks, because as this market has just plowed to higher prices across the board, we got the VIX pretty comfortable at a 19 to a 20 level, which is definitely above historical averages on your VIX. All right. Now, I appreciate all the kind words yesterday. Got through the program, and I was in there. I was reading everything, man. I'm going to go in there. You know, I was busy flying around yesterday, of course, but I was reading all the comments. I really appreciate it, folks, about my dad. And, yeah, it's going to be a roller coaster of emotions for a while for all of us. He's a special guy. I put it lightly, right? He'd want us to jump right back into things. There's no way he'd want us sitting here in sorrow and in sadness. Life is beautiful, folks. We're going to keep marching on, but I do appreciate it. I appreciate all those words, amazing words, just tremendous. Seeing I got so many messages, so many emails, so many kind words in the den, and I really appreciate it all, folks. All right, let's jump around. We got earnings. We'll kick it off with GM. GM, you're going to be up by about $1 to kick things off. You talk about a little volatility in the pre-market for GM. We're up to $50 right now. And we jump over. GM, they're going to raise their earnings guidance after easily topping Wall Street's third quarter expectations is the number there. And when you talk about adjusted EBIT, $14 to $15 billion or 10 to 10.50 a share. That's quite an up when you look. They were looking for 13 to 14, so they raise it $1 billion on the bottom and the top end of the range. Conference call began at 8:30. Seems like the market is liking that. And on the current quarter, quite a beat on revenue, and they carry that number to the bottom line as well. 296 versus 243. Third time this year that they've updated their guidance, so they keep upping it. Yeah, and as I mentioned, 14 to 15 billion now is the number they're looking for, and they also raised the adjusted automotive free cash flow. They were previously, to between 12.5 to 13.5. The previous number was 9.5 to 11.5, right? So think about it. Between the low end of their last prediction, which was 9.5, to the upper portion of this portion, 13.5, that's almost a 50% increase potentially of their free cash flow from their previous forecast. Absolutely remarkable. So big numbers for GM. Look for them to pop higher on the open right now. We're trading at about $50 for GM shares. Yeah, quite a number, right? All right. Jump around completely. All right. Let's take a look at some other equities we got this morning. How about the good old Cheesecake Factory? You got activist investor JCP Investment Management. They're taking a stake in there, so that's getting a little bit of a pop. We jump over the long-term chart of Cheesecake Factory. There's your 3-year, longer term, right? I was waiting for that high. Yeah. We double top at $65. You pull back. We're trading at 42. Yeah, you're getting above this level that we had in February. That high over in Cheesecake Factory, 41.28. We're trading right now at $44 in Cheesecake Factory. Let's talk a little bit of Sherwin-Williams. My dad loved that one, right? Painting it green. Sherwin-Williams. Well, they're going to get a little bit of paint of red this morning. Sherwin-Williams. Disappointing third quarter. Reported adjusted earnings, $3.37 a share. The market was looking for $3.55, and they missed on revenue as well. This thing's been a rocket ship to the upside, and as I mentioned, you take a longer-term look at this chart. Back from 2010, yeah, we got a pullback. As the market pulled back, we had a pullback during the COVID crisis, but beyond those two, this thing's been a straight shot from 2010. You're talking about from $30 to $380. This morning, we're going to open down about $20 on Sherwin-Williams, down to about $362. Now, this previous high we had out there, you're talking about $354. So if you're trading Sherwin-Williams, I'd keep your eye on that 354. And you got to love Fibonacci's, folks, right? You got to love Fibonacci's. Look at this one. I've had this one on my chart for a while. Where did we pull back to? The beautiful 618 of that retracement. COVID lows, we'll call them the post-COVID highs. You pull back to the 618, and you basically do a 1-1 to the upside, but we've completed that A to B, C to D on Sherwin-Williams. Might be time to chop around. All right, folks, we got markets in the red. We got gold in the green. We got a lot to talk about. Don't go away. I'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps off by 29 points right now. NASDAQ 100 off by 128. We take a look at Walmart shares. So, interesting action over there in Walmart right now. We got Walmart flat with a market negative, and you talk about, and Walmart's quite a company, folks. All right, and I do have some Walmart retirement account. It's kind of almost a hedge against Amazon, because if somebody's going to go get Amazon's business on the retail side, it's going to be Walmart, man. They're coming for them. And on the prescription side, they're definitely coming for them. Walmart's going to start delivering prescriptions to customers' doorsteps as CVS and Walgreens struggle. This is happening right now. They're going to start in 6 states, okay, but they're going to offer it in 49 states by the end of January. The one outcast, is it North Dakota? Where is it? Yeah, I believe it's North Dakota. Yes, North Dakota got state laws that don't allow that. The 6 states it's going to be in to kick things off: Arkansas, Missouri, New York, Nevada, South Carolina, and Wisconsin. January is right around the corner, man, and it would make sense, right? And I know this is, the legality of drugs getting dropped off at your doorstep. I think this is why. It's going to be interesting to see how this happens. What are you talking about? What types of drugs, right? I'm sure they're not going to be dropping a variety of painkillers. It seems like that's just ripe for those things getting taken. I don't know. But guess what? A majority of people who need prescription medicine on the regular, when you talk about the amount of prescription meds that elderly people go through, et cetera, a lot of those, those are the people that need deliveries in terms of the not being able to drop by, pick them up, et cetera. But yeah, Walmart's a beast, man. And you look at where Walmart is right now. We take a look at the longer term on a 3-year weekly from $40 to $80. We've doubled in price just over the last 2 years, and on a longer term basis on Walmart. The only thing I will say, when you look at where we're going here, I don't know where you take it. You take it somewhere around the 50 point, you put it here. We're now extending over the 1-to-1. All right, the 1.618 is going to bring you to about $92. Maybe that's the next stop on Walmart. And the 1 to 1.618, you get up there, man. This market's pretty lofty when you look at that, right? You're talking about, Walmart was a behemoth back in 2015, folks. We're quadruple the value at this point. Remarkable, the acceleration. But yeah, we're over the 1-to-1 expansion, and we're talking about a 1 to 1.618 expansion now in the sites. That's only $12 higher, and $12. We could do that in a month or two on the pace we're on right now. We'll see if we carry forward. All right, we check out what else we got going on. We jump over to Verizon shares this morning. Trading from 44 down to 42. You take a look at this thing. We trade lower. And this is where our man Bud Rolfs, love Bud Rolfs, man. We always think about him as well. And yeah, the channel king. You talk about breaking out of the channel in 2023 for Verizon. We go from $30 up to $43, but this earnings season, a little bit of a different story potentially. You jump over to Verizon. The headline out there is boost wireless subscriber additions, but not living up to expectations, okay? Revenue, $33.3 billion. They missed by about $100 million. They were supposed to take in $33.43. Declines in the company's wireless equipment revenue is the number out there. Net income falling to $3.4 billion from $4.9 billion. You have a severance charge of $1.7 billion from a voluntary separation program and other headcount reduction initiatives. I'll tell you, folks, my mom worked as an employee for Verizon. She was a union employee. And the reason why she was able to retire early, spend time with her family, take care of her grandson is because she was a union employee. And they wanted to get her out of there, stop paying her fair wages, and pay employees less wages. And she was probably part of that. But you see how it is, right? They're rolling over those employees that they're paying. $1.7 billion severance from voluntary separation program, as they call it. But nonetheless, you got Verizon shares dipping lower by about $1.50 this morning. They're going to be down by about 3 to 4% on the open for Verizon. All right, let's check out some of the big dogs this morning and see how we're trading. Mostly in the red. We got Apple shares right now. Down by about $2 to $3. We're trading at $234. It's just like the run that these equities have had, right? Whew. Look at this one. That August 5th pullback was a 50% retracement of a move in Apple that went from 163 to 240. Almost, we'll call it from 160 to 240, right? This thing went up 50% in market cap, and you pulled back 50% on the move right now, and we're coming up to this area. You got to get through this area. We're going to need more volume to break through that area on those highs that we set on July 15th right now. But Apple shares down by about $2 to kick off the session. We jump over to Microsoft shares. Look at that. Microsoft positive by $1 this morning. We jump over to NVIDIA shares right now. Whew, it never stops, man. NVIDIA hits an all-time high in the pre-market at 144, and we're going to open at an all-time high for NVIDIA. We're pushing I guess we're just under right now. Pretty close. It'd be an all-time high open. Yeah, look at this thing, man. It's just not slowing down, man. And that's the type of break you like to see, right? You're going to break above these recent highs, that recent high of 140.76. That's a nice bar, but we are going to have to see a little bit more volume, because look at the volume we have going up here. Where NVIDIA back in June, okay, this is on a daily, talking about 517 million on the day that we started that pullback. The next day, 655 million, and then 476 million. Yesterday's day, only 264 million. So we'll see if it can hold. Nonetheless, we're going to be flat right now for NVIDIA. We jump over to Tesla shares. Slightly in the red by about $1 for Tesla. Back to a 15-minute chart, just chopping around near yesterday's lows for Tesla, 217.50 right now. We jump over to Google shares, trading at 164.93. Netflix shares right now, 768. This thing, watch out, baby. Look at this thing. It's just not stopping, man. I was reading something yesterday that, like, over the last X amount of years, it's like 20 years, 10 years, something like that, Netflix outperforming everything, outperforming Apple, outperforming just every single equity, because if you take a look at a longer-term chart of this thing, right, you go back, yeah. How do you like Netflix at $7 in 2012, folks? How do you like that? How do you like Netflix at $8 in 2011? You can cherry pick any price you want, let alone the 160 you could have gotten in 2022. Netflix shares slightly in the red with the market this morning, but yeah, it's quite an acceleration for Netflix shares. You jump over to some of the other streamers. Warner Brothers Discovery trading flat right now at $7.55. Yeah. Quite the move, to say the least. All right, let's check back in on that gold contract right now. Gold up about $15 at $27.53. You got the dollar right at about 104, 103.97 right now. And talking about CPI, talking about prices, this is an interesting one from Bloomberg, just talking about the CPI and what goes into it and what does not go into it. All right. Now, the Fed's preferred inflation gauge is the PCE. Okay. And when we come back from the break, we're going to talk about the CPI. We're going to talk about the PCE. Okay. And we're going to talk about what's left out of that CPI. And this is an interesting one because you know what's left out of there? Interest payments on credit cards, property taxes, tips, all of them going up. Right? All of them. Yeah, you take a look at credit, man. That's a teaser. Credit cards going up. All right, folks, stay tuned. We're coming back from the market open. We got the S&Ps negative by 26, NASDAQ 100 off by 125. We'll come back. We'll talk some CPI. We'll talk some PCE. We'll go over some equities. Stay tuned, folks. Coming right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps negative by 25 points at 58.70 this morning. NASDAQ 100, a little bit of a bid off the bottom there. And watch this 20,360 level in the NASDAQ 100. We spiked there pre-market yesterday. That was your spike at about 11:30 in the morning yesterday as well, and that's right where we just came back to this morning. on the NASDAQ 100. Down about 116 points, though, right now, 20,398. We keep our eye on yields. Bouncing a bit, but as I mentioned, that 10-year just under 4.2%. Quite the rise in the recent trend. And yeah, so first, jumping back to Netflix. I know, it is a remarkable run, right? Talking about in the den, and I agree, Jim. What's remarkable is I remember those early Netflix plans. First you're on Blockbuster, right? Then you're on Netflix. You remember your queue? Remember your movie queue, right? You'd have the queue, you watch the movie, you send it back to Netflix, the next one in your queue just arrives. I remember some nights just sitting there building your queue, right? Building your queue. And what's remarkable is, okay, you think about it. So going back to this chart, I can't believe it's 10 plus years ago, but do you remember, folks, those days when Netflix started coming out with their amazing budgets for what they were going to spend on original productions, okay? And I'm just going to zoom in on the years like 2009 to 2017. So remember, Netflix is trading at $766, okay? You can't even see on this chart. I got to go like this to see on this chart where we are. What's remarkable is they started producing, okay, and just cherry picking here. In 2012, their first original series came out, Lilyhammer. Never seen it, okay? In 2013, House of Cards was their first big original series premiered, okay? Now, when you talk about when they started plowing real money into it, I got articles out here from about April of 2025 that you're talking about $17 billion. So 2013, 2013, 2014, they really started coming into it. You see the rise, but it is interesting, that pullback, man. And the one thing I wanted to say is adaptation, right? Adaptation. They ate Blockbuster's business, but anybody in that business could have made that transition. Just remarkable that they saw the path. They had no fear. Reed Hastings, he made it happen. And to his credit, you got a company now that is valued at, what are we pushing? $328 billion. I mean, what are we talking about? Half the size of a company, even like Walmart? Something to that degree? What's Walmart pushing right now? Yeah, about half the size of the company of Walmart. Just like that, when you put it in that context. Walmart shares, green in a red day. It's a big one with that pharmacy deal, folks. There's no reason, again, right? Now, Walmart, in terms of process, etc., you got a company like CVS right now. They're down by 1.2%. Yeah, Walgreens Boots. I mean, they're both in so much trouble, man. These charts, Walgreens Boots, I mean, I don't have to tell you folks, as a technical trader, that looks like it's on its way to zero for Walgreens. CVS, not quite as dire, but you're at a critical area for CVS, man. You break through this area, right? Where are you going next? $40. One of my dad's favorite numbers. $40 is where we're going. And Walmart, you got a positive action today. All right, jumping back, as I mentioned, CPI, PCE, when we're talking about inflation, this is an important one. And the article out here from Bloomberg this morning, okay, just talking about, interesting to keep at the forefront of your brain when you're thinking about where we are in inflation, where we are on some of the numbers that are coming out in terms of PCE, CPI, and how the Fed is going to use those numbers as we push forward. Now, this article is talking about the CPI, folks, okay? The Fed prefers the personal consumption expenditure versus the consumer price index, okay? When you jump over, this is the best chart that I know of that's a quick glimpse of the weightings of these two statistics, okay? And it gives it nice and easy. Let me see if I can blow it up even more. There's a little bit more. There we go. Nice and big as I can get it. Perfect. Housing, okay? CPI, 1 out of 3. 33% of the CPI is housing. Food is 15%, transportation 11%, other is 18%. When you get into PCE, healthcare. Why is that? Because in terms of what we actually consume, healthcare is almost the biggest component, folks. The amount of money that we spend on healthcare, I mean, it says it all right there. Housing is only 15% of PCE, food 13%. And the best description I've ever heard, okay, of these two is that consumer prices, CPI, are what you pay for out of your pocket, okay? But you consume items that you might not pay for yourself. And the best example of that is healthcare. Okay, are you paying for healthcare out of your pocket? Well, many people are not, because they get healthcare through their employer plans. But it still matters when it comes to inflation, because if you have a job and that employer is paying higher costs for your healthcare that you are consuming, that is going to translate into prices, period, across the board. Okay, so the Fed prefers the PCE because it's a greater representation of the costs that go into all the items we're consuming, even the ones we're not paying for ourselves. Okay, now what this article talks about, though, on Bloomberg here is that you got taxes, tips, and interest payments not included in CPI, and I'm going to zoom in on the interest payments element of things. We're rising. We've all know this number is climbing, man. We pull back during COVID when we got stimulus checks. You had revolving balances at about $550 billion. That number dips all the way down to almost $400, and then boom, we're up by 50% for credit card balances. That number, probably somewhere near 22%. All right, if you got credit card balances out there, folks, see what you can do. Sometimes you can transfer them to a separate credit card if you just want to roll that over to save yourself some of the percentage points. Sometimes you can open a new credit card that has an introductory rate for like 18 months or something like that. Gives you a chance to pay it off over 18 months, or at least give yourself a reprieve for some of that interest rate, because 22%, man, you can't get out of that number on a credit card. $628 billion in credit card debt is rolled over or unpaid every month right now, okay? 22% is what the typical interest rate is, and that means that while underlying purchased items or service was included in the official measure, millions of dollars of credit card interest payments are not being counted. So that number goes up, and that is weighing on consumers, okay? That's not counted anywhere in any of these statistics, okay? Yeah, so that's a factor that's gonna play into things when you talk about consumers' buying power. Then what do? You get into property taxes, okay? Those are rising dramatically. Yeah, so they're up across the board. And then, of course, optional tips. Look at these. A few other expenses that don't make it into the CPI. I mean, it's a running joke in terms of where tipping is and where it is not, and it's everywhere, right? You buy any single thing at any single store, and they slide around the screen and say you want to tip 15, 20, or 25%. Yeah, and look what they're listing here. Optional tips in there. That's an added press on the consumer. Gambling activity. Yeah, we got, guess what? In April 2025, Mega Millions tickets, they're going up to $5. They were $1 in 2017. Mega Millions is going to be up 500% from 2017 to 2025. Now, be careful of the lottery, folks, all right? Marijuana use, illegal activity, they cover it all. Nonetheless, those numbers on CPI versus PCE, they're driving a lot of that yields. We'll take a look at some of that. We'll be right back, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets in the red, and we're going to talk a little bit of retail. Now, Walmart, they're delivering prescriptions to everybody. Walmart flat on a market that is red today, but when you talk about retailers, man, this one over here in the Journal, retailers grasp for holiday magic amid a raucous U.S. elections and shorter season. Now, we all know the election season is here. Where are we? We're 2 weeks out today. 2 weeks out today, man. 14 days, the press is on, politics are everywhere. Folks, don't let politics ruin personal relationships. I'll just say that, man. It's not in my life at all, but it happens. We all see it, and it's a bummer because politics is so divisive these days. Try not to let it, because I know it's big. You know where I stand, but I got many friends that disagree with me to a certain degree in politics, folks, and it's a bummer where we are right now. Okay, but we're not going to dwell on that. We're going to talk about retailers, and how about there are 5 fewer days? That's the number here. Okay, a quirk, we'll call it. That's what they call it. Nonetheless, the calendar this year lines up. Pay attention to these retailers. They're going to be pushing 5 fewer shopping days than usual between Thanksgiving and Christmas. That is a big number when you talk about the types of sales that you're doing, right? Now, what's remarkable is I was just in Target on Sunday, okay? Just in Target on Sunday. And they got Christmas out there already, folks, and I'm laughing. So October 20th, and that's probably why. Halloween's down. I get that. The Halloween decorations are down. We're only 9 days out from Halloween, okay? But Christmas is there already, and they're pushing it, man. And whether you're talking about Macy's, they put it, Lululemon, Athletica, Skechers, all of them out there working to resist the undertow, okay? And what are we talking about for growth rates in holiday shopping? Look at these numbers, man, for COVID. And then look at where we are right now. Declining numbers. Yeah, you're talking about only a 3.5% growth rate in holiday shopping is the number there. And that is down from 3.9% last year and 4.7% in 2022. Yeah, 62% of Americans anticipate feeling financial strain this holiday season, down from 67% is the number out there. Things were looking a little dire in 2023. As a result of rising prices, nearly 6 in 10 respondents plan to do more of their winter shopping at discount stores than they did last year. Now, we've been hearing this stuff for a while, right? But nonetheless, the press is on, and they're talking about how you're going to do it. You could argue that we over-innovate. That's Skechers, okay? They're trying to separate themselves from the pack. Yeah. At mid-year, however, Skechers shoppers were spending with second quarter sales up 7.2%, man. They just talk about a few different anecdotal retailers in here, but keep your eye on it. 5 less shopping days for the holiday season. And in light of the context of everything else going on, right? You look at those rising credit card balances, 5 less shopping days. Seems like we still are feeling the the effects of inflation, of course, as we're all kind of normalizing that these are the new prices that we're paying for everything. Nonetheless, you jump over to Target shares this morning, down by 1.2%. We take a look at a longer-term chart on Target. Chopping it around about 150, down from 268 on the highs of COVID. And what I will tell you, folks, is that, I saw this. We love to go into Target. We do Target, I've talked about, it's our Toys R Us experience for Tommy and I, Target. And so I could see on this pullback, folks, I could see it in the last couple of years, okay? Target, they had problems, big time. I would go in there, would play around and say, sorry, Tommy, we're not buying toys today. These toys are too expensive. They got the same exact toys. They're not replenishing their supply because they're oversupplied in terms of what they have. They're trying to get rid of them. They've made a little bit of a shift this year, but boy, they got a long way to go with Target right now, with the market down about 1.2%. We check back in on that gold contract. It's keeping, look at this, as I speak. It's not stopping, man. Yeah, gold just trades to an all-time high yet again, 27.56. And we'll use that as a segue to a new bull phase. Well, CNBC loves their clickbait, okay, folks? But I'll tell you, my dad, I was talking to him a week or two ago because I got some gold equities, man. Of course I got some gold equities, all right? I can't be a Tommy O'Brien without some gold equities in my portfolio. And some of those equities from this February run, up 100%, right? I mean, you check out the likes of whether it's Harmony, okay? Look at these runs, folks, okay? From February, $5.50 to $12, okay? You take a look at Hecla, $3.33 to $7.63. Endeavor was a big one, rocking higher, from $1.42 to $5.50. Just the run has been magnificent. So we're talking about it. Can't help but talk about it, all right? I'm saying, man, I get some big positions in here in terms of percentage-wise. Maybe I get some free shares. Maybe I lighten up. You can't go wrong there. And, my dad always loved free shares, folks. You listen to the program. You can't go wrong with free shares. But his feeling was the gold was going higher, man, that we had more to go. And if you look at that dollar index, man, it is hard to argue that that's not the case because the dollar has not moved at all. The dollar is right where you were in the beginning of 2023. And over that same period of time, you've had gold trade from 1,800 to 2,800. Okay, just absolutely remarkable, let alone, as I talked about consistently, the recent one we've had. But yeah, so keep your eye on that gold contract, man. Going to be interesting to see where we go from here. You got a lot of geopolitical risk, of course, happening. But yeah, gold continuing higher. As that dollar, where are we? About 104 still? We above, below? Yeah, we're back above 104. Whew. They just keep going, man. And let's check in on yields. You jump back too. We'll start off with the 2-year. The 2-year right now, a little bit of higher price, lower yield. The ZT, basically flat, but just off the lows of 103.07. You jump over to that 10-year right now. And the 10-year, yeah, we're sitting right now up by 2 ticks, 111.18 on the 10-year. And as I mentioned, the 10-year yield, we're now just off that level, sitting at 4.2%. All right, what else do we got going on? Peloton, a little bit of volatility. They're going to sell their bikes at Costco. Yeah, they partner with Costco to sell the Bike Plus is what the deal is there. You check out this article. Partners with Costco. Everyone wants to partner with Costco, man. $19.99 on Costco.com. Excuse me. Costco is going to offer their Bike Plus in 300 of its U.S. stores for $19.99 and on Costco.com for $21.99. Okay? That's probably because they're going to have to ship it to you, etc. Right? You go into the store, you pick it up. It's still $2,000, folks. Okay? I don't know who's paying $2,000. Now, listen, if that changes your life, okay, and I mean it, that changes your life, you get healthy, you're there for your family, right? You're using it consistently, well worth it, okay? It is an inordinate amount of money for an exercise bike that you then have to pay a subscription service to use, right? So be careful of that one when you're talking about it as well. But Peloton shares, you're up 1.6%, but look at the quick give back, right? They gave back 50 cents on a $6 stock. you're barely up. All you're at is where you were yesterday. This market's a little bit worried about Peloton. Even on that deal, you jump over to Costco. Costco flat today. This market's catching a little bit of a bid, though. We got the NASDAQ only off 1/3% right now. We got Apple shares down 1.5. They're not catching a bid. Amazon, they're down about 0.3%. All right, folks, we got one more segment. Come back. We're going to be talking some nuclear energy again. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, we're going to talk a little bit of nuclear energy. We've got the S&Ps right now, negative by about 0.4. As I said, NASDAQ catching a little bit of a bid off the lows right now. You're up by, what are we talking about here? Yeah, 100 points off the lows. 20,461 in those growth stocks. And we're going to talk some growth stocks because they're going to be the ones needing nuclear energy. Yeah, and you got Amazon, Google, and Microsoft all within the last 3 weeks or so, inking nuclear energy deals or putting out the plans that they have in place. But yeah, Amazon, Google, and Microsoft, they started off just that. Each struck recent deals meant to bring more nuclear power online to satiate burgeoning energy demand tied to AI. And just getting into some of these numbers, man, they all want to be clean, okay? They all have their aspirations to be carbon neutral, okay? And that's going to take nuclear. There's no way about it, man. For tech companies, the stakes are high. Microsoft's emissions rose 40% during the 3 years through June of 23. Google surged 50% in the 4 years through December, right? Microsoft, as they have emissions rising 40% over a 3-year period, they're committed to producing more clean energy and reaching its goal of becoming carbon negative by 2030. And folks, that's because their nuclear reactors are going to be coming online when? 2028. Yeah. Dominion Energy, they're going to be building it out, and they filed a plan with Virginia regulators to meet that plan out there. It's going to be an interesting one, but it's coming at you, folks, because the amount of energy they're going to be needing, AI is going to be run by server farms out there. Excuse me, Constellation, that's the one Microsoft signed with. 20-year power agreement. They expect to send $1.6 billion just to restart those reactors from Microsoft on 3 Mile Island. So it's coming at you, man. It's coming at you for sure. And CEG is Constellation Energy. And you look at the pop they've had recently. Yeah, there's the Microsoft deal out there about a month ago from 170 to 270 right there. But today, you're down about 1%. Folks, thanks so much for kicking off the trading day right here with me on the Morning Market Kickoff at TFNN. I appreciate you being there so much. Stay tuned. Our man Basil Chapman, he's coming up next with the Tiger Technicians Hour. Steve Rhodes, Larry Pesavento, our man Jacob Shoup. Have a great one. Have a safe one, folks. We'll see you tomorrow.